Hello, everyone, and welcome to this panel discussion on M&A and investments in this new normal, as we call that. And, it's now a cliche to call pandemic and everything, but I think everyone on the business side is coming back with vengeance. And here I have one of the best panels that you could get for the Pune ecosystem, very active, and they do multiple different things and have done multiple different things. I have Dr. Premnath with me, I have Sarav with me, I have Kunal, and I have Robbie. Welcome, all of you.
Thank you. Happy to be here.
And my name is Vivek Sadle. I'm the co-founder of law firm Legal Logic, and we've been around for a while now, and have been working in the Pune ecosystem predominantly to help the startup as well as a lot of other larger companies in their growth phase, as I call that. Let me do a quick introduction as we get started. Dr. Premnath is a well-known face. He runs Venture Center, and is a marquee person in the startup ecosystem. Many of his companies in Venture Center have done wonderfully well, and we'll today hear from him in terms of what has taken him to get to this level and how he sees the market right now. I have Robbie with me, and Robbie does some cool things with his gaming skill, and he's very, very passionate. You can see his machines behind. He plays with that all the time, and he's a fun person to be with. Sarav, thank you so much for joining. I know it's late for you, and Sarav is a strategy officer at iLink, and iLink has been at the forefront of looking at buying companies and doing inorganic growth. And we'll hear from Sarav what he thinks, and he brings a very different perspective to table. And we have Kunal, who's been, he's a serial entrepreneur. He's done multiple, couple of exits and a recent one pandemic. During the pandemic, the deal started and closed. So we'll hear from him what went, what was the thought process in terms of he leading to now discovery. So thank you, everyone. And we will start this panel by my first question to Sarav. Sarav, you operate out of the US, but you have investments in India, and you continue to look at different opportunities all the time. What has changed in this new normal, if you look at it from a buyer's perspective?
So, especially after the pandemic, right? Maybe what we are looking has not changed, right? But we more initially, like we were a little more cautious, right? When we go invest, right? There's always certain risk, but because of the pandemic, we wasn't sure, right, how those risks will play out. But we took a cautious approach of maybe doing a smaller transaction than a bigger transaction, right, to minimize the risk. But we learned so much in that, 6 to 9 months, right? But what the customer wants doesn't change, right? They are also scaling back a little bit, right? We in fact closing 3 transactions right now, and all of them we worked over the pandemic. But in terms of size, it's a little smaller, but we are bringing in a lot of good capabilities through them, right? So I would say the change is not much. It's more of the size we redefine, but what we were looking for, what we are looking now, has not changed at all.
Okay. And from when you evaluate an opportunity right now, Sarav, what is the thought process? And I understand from the technology and from your ask standpoint, it's a constant. But when you look at a particular deal at this time, and when you are evaluating, what is the difference that goes in your mind as against the 9-month back situation?
See, our primary things we look for is, one is capability, what that company is bringing in, right? We are very, we are looking in certain areas we want to acquire companies. The second most thing we look for is entrepreneurs, right? We want to bring in more entrepreneurs to iLink ecosystem, right? Grow with the entrepreneurs, right? We can always hire people from the market, superstars, but there are few things entrepreneurs can do which is difficult to mimic from hiring from the market, right? Our goal is to look for an entrepreneur who can willing to grow with us, right? We always look for that one thing. They want to stay with the company for at least X number of years, right? There should be enough motivation for them to stay also, which we are very focused on doing it. But in terms of what we were looking, like I said before, has not changed much. But we look for people, entrepreneurs, and capability. These are the three things we look for, and of course, commercial aspect of it need to work out, right? That's something, especially recently in the last 12 months, the expectations with certain companies are to the roof, right? So those are all like, in the very early stages, right? If it's not our cup of tea, we don't continue that discussion. But there is always, companies, though expectation doesn't look like meeting in the beginning, but once people understand each other, what each side of it bring into the table, right? We are looking at growing together, right? It's not going to be transaction and then the deal is over, right? So if they see the growth path, right, what they can grow to, right? We have completed a couple of deals in the beginning. It doesn't look like it's a match, but in the end, it worked out really well.
Okay, thank you, Saurav, and I'll come back to you with more. Moving on to Dr. Premnath. Dr. Premnath, you've been one of the rare professionals who have been the catalyst for a lot of high-tech, health tech, and other businesses. And today, Venture Center is a role model for many of the startup and the ecosystem as such. What's your view on the current investment and M&A environment for your portfolio companies?
Let's look at it in two parts. First, as far as investments are concerned, we are seeing investments happening right now. As Saurav said, probably some of the investors would be looking at smaller, relatively smaller investments. But we are an early stage incubator, and so it makes a lot of sense for them to do the smaller scale investments right now. The other thing that we are also seeing is that a lot of investors are focusing on lead creation activities at this time. They've used the pandemic to actually build a pipeline. I think there is some delay in due diligence and closure, especially when site visits or face-to-face meetings are required. And most investors would want to have face-to-face meetings before closure. So that is something which is something we would see a slowdown on. But I expect that there will be a surge in deals as soon as travel opens up, because I think there are people who have created pipelines. On the merger and acquisition front, since we are an early stage incubator, we see more investments than mergers and acquisitions. And mergers and acquisitions happens after companies often have exited the incubator. But that said, when we come across companies, mergers and acquisition cases in domains which are, say, tangential, not core IT, but where IT is utilized, or IT is the interface between IT and health, or IT and agriculture, and so on and so forth. There we see that many of the acquirers are not as experienced in acquiring startups. So there's a lot of confusion between sometimes technology sale, mergers and acquisitions, strategic investments. There is a little bit of a sometimes an effort to force fit a startup into a traditional business mold. So these are some observations which we, from our experience, from the incubation world.
Okay, Okay, that's very, very interesting. I will come back to you as well. Kunal, as I mentioned, you are a serial entrepreneur and you recently did a deal with Discovery, and this was during the pandemic. What made you decide to do this deal?
Well, so for us, so firstly, I come from the live video TV streaming business, OTT world, which is basically consumption of mobile video, internet video over various multi-screen devices. So from our perspective, the fundamentals of the business hadn't changed. In fact, there was a significant impetus during the pandemic period. Because a lot of people couldn't move out, the consumption across various OTT portals, OTT apps had significantly increased. So from my business perspective, I think fundamentally there was an impetus, but the fundamental nature of the business hadn't changed. So there wasn't and there isn't a lot of difference between the pre and the post-COVID times. What we were looking to do prior to the COVID pandemic was that we were there was basically an M&A sort of consolidation happening in the OTT world, where a lot of companies were coming together, merging, joining forces, joining hands to offer, video distribution services to various customers, and essentially collecting profits or the revenues across all the services to kind of become a one-stop shop for digital video distribution. I think fundamentally that trend continued, and we thought, as part of I think from a pandemic perspective, there was definitely a hit on the valuations and stuff like that, because clearly the forecasts at that point in time were obviously not very great. It wasn't very clear how long it's going to last and all of that. So from a valuations perspective, I think there was definitely a negative mindset. Having said that, what we were looking to do pre-pandemic and what we are looking to do post-pandemic and during the pandemic hasn't changed, because the fundamentals of the business, the profitability, the strive towards profitability by various companies in the ecosystem hasn't changed at all.
Okay, no, that's interesting comment that you made, because many times what we hear is that if someone's doing a deal in this time, there is some kind of pressure, duress, and so on and so forth. But obviously, what you did was more a strategic one rather than look at anything different. So yeah, I mean, that's very interesting. And coming to you, Robbie, I mean, you are in thick of action. Everyone's looking up to you to the next game. And the gaming industry today is seeing a fair bit of traction on the investment side. And I know you backed some very good names with Japanese investors and others. What's the feeling and what's happening?
I think a lot of people ask me this or saying that, hey, what are you doing with all the favorable winds? So I keep telling them that, hey, there's actually a famous saying, a very stoic saying, which actually says that if you don't know what port you're sailing to, no wind is favorable. So that's kind of where we originally started out, by saying that we actually started a social gaming company, a real-time multiplayer company, much before the pandemic. What the pandemic did was to kind of accelerate our adoption by 3 to 5 years. So that's something that kind of turned out really well for us. So I also tell them that, hey, you can't change the direction of the winds, but also adjust your sails to get there faster. So that's kind of what we did, which is saying that, hey, now that we kind of saw these winds, let's kind of double down. Let's kind of take a bigger stab at this. Let's kind of capture, so to say, the opportunity fully, which is where we kind of both raised money, increased our company, did a merger. So kind of going at it at a bigger scale is something that we kind of thought about. Fortunately, this is something that I always believed in much before. I always thought that social gaming is going to see a large scale adoption in the future, irrespective of the pandemic. Super Gaming, my newest company, we started it about 2 years ago to kind of capture the opportunity where people want to hang out online. And that's something that we kind of said that for us, raising more money has been more in terms of, now that we figured out the direction, let's get there faster with trusted investors and partners. So that's kind of the approach that we took in this pandemic. The new normal means there's a great demand for what we're doing. Every game that we made is seeing at least a 40% improvement in both usage, revenue, all essential KPIs. That's kind of something that happened. Also, I think there's been a lot more inbound, Vivek. One of the key things, in gaming is that earlier people that would never give us time of day now reach out to us and kind of say that, hey, what's happening, what here. So people are now actually also asking us or saying that, hey, what's our thesis? What are you kind of thinking about? Help us understand the space better. So that's kind of always something. It's good to be around in these times to kind of figure out, like, making something bigger, taking something and growing it.
Okay, no, that's really exciting, as such. So great. I mean, it's a great going and great to see. This is a booming time for gaming and a lot of content business as well. Coming to you, Dr. Premnath, one question that continues to be debated is, especially for the scientific community that you incubate, and there's a lot of deep science related work that your portfolio companies do. Do you see that the investors have a greater understanding of this business? How do you see that panning out? Because it is very important for India, as our Prime Minister has been very clearly articulating that science is something that needs to get imbibed, and that's exactly what your venture center is doing. So, what's your sense?
Yeah. So, a little bit of a preamble there first, which is that, at the end of the day, it's about business, and science is an enabler here. The science provides the edge, the sustainable advantage, and very often, as I look at when I talk about startups, I see it as being all about foresight, right? And where that foresight comes from. Of course, in Robbie's case, it is gaming, but in other businesses, the foresight is on some other domain. So, for example, today's vaccines, the mRNA vaccines that we are talking about, somebody foresaw the need for an mRNA platform way before the pandemic hit, right? So now, when we look at investors and their perspectives for such businesses, we often find that it's all about how they look at the world, the foresight that they shared with the founders, the degree of confidence that they may have, and whether they are believers or not. In the Indian context, while that exists in the IT world to considerable extent, in the remaining industries, we are a little behind as far as that is concerned. So very often the ecosystems that have that foresight are elsewhere, right? But in the Indian context, we are now actually seeing very interestingly changes, and there are people who are looking at deep tech, deep science kind of ventures. The interesting thing is that the concentration of investors who have that foresight, right, is inversely proportional to the knowledge intensity and the complexity of the field. And also, the further away you are from seeing that happening, or you're earlier in the game, the concentration decreases even further. And that's universal everywhere, right? Now, the question is, how do you break that? So we are seeing that many of the investors do come and say that, we do not understand the tech business well enough. But we are increasingly seeing investors relying on trusted advisors. We are increasingly seeing people reaching out to experts to understand the potential of the technology, to get that vision of what is possible, because you're seeing it happen as you around you. And in fact, the pandemic has exposed that even more. I mean, you can see that things that matter are not in many ways require a lot of depth, and therefore I think people in different domains, disciplines are looking at it. And even at the interface between IT and science, in many ways, we are seeing a lot of action right now. People are exploring those opportunities. investors are increasingly approaching some of these companies, and people are also looking at one other thing that has happened is that in the current context, what was business as usual is no more business as usual, right? So what was the way companies were evaluated for potential is radically different now, in my opinion. So that these things are good news, in my opinion, for deep tech, deep science startups in the Indian context. But nonetheless, in certain domains which are very, very IP rich and cutting edge, we will need to look at ecosystems outside India, right? And so that will, of course, be one part of the plan for many companies in cutting edge work. Yeah.
Okay, that's interesting. Sarav, what areas do you think? I'm not asking specifically from iLink perspective, but from an ecosystem standpoint, what's your thought in terms of consolidation? What in 21 you think will pick up more pace? As of course, the consolidation seems to be the name of the game. It's going to happen. It's happening right now. What areas do you see in 21 come to the fore?
See, definitely, edge technologies, will have, a lot more growth, and IoT is a space, there are exponential growth happening. There are a lot of investment happening in that space. And the most growth we have seen recently, and I think that will continue for next few years, is data, right? Data is one area. I don't think many customers really focus to understand their own data, right? Now in the market that's happening, and once they start analyzing their own data, they get to learn so much about their own business, right? Even within iLink Digital, our data business unit, they grew almost 100% this year, right? Which we didn't expect, right? The other BU's growth is slightly far less, but data is exponentially growing even in pandemic. Especially now, people want to understand their business even better, right? So data is a space, I think, in different forms. So data is very broader terms. It could be data analytics or data engineering or AI/ML or even conversational AI, right? So there could be multiple branches in between. I think that's one area overall, going to grow exponentially in the next few years. And you asked about consolidation, right? But we do believe from iLink, right? Consolidation can help for companies, but we do believe in specialization, right? Sometimes a boutique specialized shop, customers would trust more than a big monolithic company can do everything, right? See, that's the model we are going towards with transactions. But consolidation definitely helps, especially in this kind of scenarios, right? The more muscle power you have would help to handle those situations.
Okay, interesting. Robbie, coming to you, and I'm sure now you have a lot of term sheets coming your way, a lot of people saying, hey, can I make an investment? It's as I call it, it's a reverse vesting for a founder, and that's a good space to be in. What do you look in terms of an investor? When will you say yes? When will you say no? When you have so many people chasing you?
I always say yes. But so don't say no is a golden rule from what you should always think about. But anyway, on the lighter side, ours is a complex industry, Vivek, because it's a relatively new industry, especially in the Indian landscape. If you kind of see the Indian landscape, there hasn't been a lot of success from an exit perspective, in the gaming space. We're hoping to change all of that, but we think that, that kind of is what leads to a lot of discussion, figuring out. You have to think about it from both sides. People kind of wanting to chase a wind is kind of good, but, from our perspective, getting investors to see what you're kind of selling is also hard, because, we've invested traditionally in a very deep tech. We make a real-time multiplayer game. That's a first-person shooter. We have about 50 million people playing it. kind of building that has taken us 3 to 5 years. Nobody would kind of believe us, when we kind of said that we're pursuing this goal 3 to 5 years ago. People would actually laugh at us even. But today when the pandemic came in, especially after the Chinese ban, I think we were seeing 1 million people sign up every week. So that's kind of something that was our demonetization moment, so to say. We've not changed anything from an investor perspective. Getting investors to see, understand expectations of saying that, hey, here's what we're looking for, here's what we're looking to invest, because we're not looking to kind of just harness what we're doing now, but kind of see this as a long-term change in the community itself. Players, now it's completely normal for people to play a game sitting at home, and parents, even people at work will kind of be playing that. So that's something that's really worked. That fundamentals of the business hasn't changed. Our investors, the people that we've signed up with are already run their own multi-billion-dollar game in Japan. So that was kind of something that made them very knowledgeable about our business, helped them guide us through various phases of it. It's gaming. It's hard to say what's going to work, what's not going to work. People call it a hit-driven business, but we don't think it's really hit-driven. We believe that there are, after spending 10 years in it, you can identify certain patterns. You can kind of figure out what the archetypes of success might look like and build towards it. Even though there is enough interest, tailwind, enough appetite, but at the end of the day, there's a lot more conviction that needs to come in. People need to kind of figure out, because there's nothing to kind of go and reference back. I don't think there are as many term sheets kind of going out there. And even if it's a term sheet, it might be a low ball offer. Sometimes people might not see the entire value, especially because in the US, gaming might be a much more standardized business with everybody understanding it. But in India, especially, you might not kind of see that kind of term sheet coming in to kind of value the business the way that you would like to think about it.
No, that's a fair point that you make, Ravi. Kunal, you've sold a business. So if you were a buyer, what's your advice to an entrepreneur when he is looking to sell? Now you have a great vision in terms of looking at how buyer has looked at your business. So how would you advise someone who's looking at a potential sale?
So there are a couple of things. It depends really on, as a buyer, what is it that I'm buying? Am I buying a business? Am I buying the talent? Am I buying the IP? So depending upon what is really being bought, I would think about, from an entrepreneur's perspective, you need to basically be excellent at your core functionality. And depending again on the industry that you are in, if you are excelling in any of these 3 areas, if you are excelling in building up a great business, having great profitability, having a great reach out to customers, building up a great pipeline, and if that is what you're as a buyer, if that is what I'm targeting, I would definitely look at some of these. Then it becomes more of a strategic buy where it kind of adds to the top line for the buyer, or it adds to the bottom line of the buyer, depending on the case, maybe. If I'm buying IP, if I'm buying the team, then again it becomes a matter of how excellent the team is at what it is doing. From a strategic roadmap perspective, does the team have enough things invested so that they are able to drive the roadmap, bring out the features that may be necessary for me as a buyer to have the added advantage? So I again, from a buyer's or the seller's perspective, I don't think fundamentally things have changed. Your numbers may differ now, pre-pandemic, post-pandemic, but the fundamentals of the business, having profitability, building up a great team, being a center of excellence, being extremely capable at what you do best, I think that hasn't changed.
Okay. All right. And Dr. Premnath, you've seen a lot of companies go without advisors. Many times that's possibly not required, but many times it's becoming complex to read through the documents that come through, or even structure something. How do you advise your companies in terms of seeking help from domain experts, and not just in their domain, but outside of their domain, when they are looking at any of these strategic transactions, including investments?
Yeah, I think advisors actually play a very important role, and there are different types of roles that come up in such transactions or potential transactions. Many, generally speaking, in India, besides a few domains, the amount of business experience in entrepreneurial settings is quite limited, and that basically means that people have to. Many of them have to learn along the way. Many CEOs and founders are actually learning along the way. So even just beginning with the negotiation framework itself, there's quite a lot of a relationship with it. There's a very important relationship with an advisor, which is more towards, which tilts towards coaching or mentoring in terms of how to position or structure a negotiation framework itself. Of course, the final decision is with the CEO and the founders, but that said, it helps to really have a framework around which to negotiate the deal. The second important aspect is that many of our founders are first generation entrepreneurs, and and they have their own baggage that they carry with them. They can be quite passionate, they can be quite emotional, they can there are situations where they may lack familiarity with the kind of structures, and when you talk about people who come from the scientific domain, they are sometimes impatient also with everything other than science, right? So so that is another aspect, because sometimes you just can't afford to get it done fast, right? You need to take your time to negotiate and do the deal. So this is another aspect where somebody has to share their experience and tone down the move it in the right direction, and so that it gets to a conclusion at its own at the right pace. The last point, of course, is providing, very important aspect is providing a structure and optional clauses and so on and so forth. Sometimes you get stuck in deals just because people have not really suggested options, alternatives, and that is something which is where experience really matters, in my opinion. I mean, knowing various different situations and what could be optional arrangements to break through a stalemate is something that I feel is where we rely a lot on advisors. Of course, I mean, and what might fly, what might not fly, what could be showstopper. These kind of judgment issues are quite important as well, and I think our CEOs and founders really benefit from those kind of inputs from advisors, and I think this is very critical.
Yes, and one other thing that I also like to tell my clients is that there are some conversations which are not pleasant conversations, and you ought to make those at appropriate time. And you are in a relationship potentially with a buyer or an investor. You ought to use someone in the middle to make sure that the conversation is made in the right earnest, without impacting the relationship, or there are words exchanged in the course of negotiation, and someone who brings a very neutral approach can do a little better job than the CEO or the founder himself.
Yeah, that's a very good point, Vivek. I mean, that is so important. I mean, most people already know their potential acquirers and buyers. They're engaging with them in some form or the other. So it does really make a difference. And these so-called crucial and difficult conversations, I'm sure most of us are not trained to do. So it is important to do that. Yeah.
Right. And Sarav, when you look at buying companies, and assuming that the technology matches what you are looking for, the valuation is all right as well, what would it take for the deal not to happen? What are the don'ts in a deal for a buyer? even after having settled the valuation and, of course, the domain that you're trying to get into?
Yeah, the couple of things, right? One, what kind of liability? Sometimes the liabilities of a company is difficult to understand at the stage of LOI, right? Without getting into details, one of the transactions we are working on, everything is good. The capability, people, and very nice people to integrate with, but the liability we might get through that acquisition is more than the value of the acquisition, right? And then it is difficult even to calculate the liability, right? So, that transaction, we still have a path to move forward, but, the liability is a big thing at times, right? And then one transaction we had to back out, everything was good, but we noticed in the last, couple of weeks, some kind of unethical behavior which we couldn't sense at all, right?
Sure.
One thing I would tell, if your instinct says that this transaction not going to work out, I think it give a serious thought to that instinct, right? Many times we kind of ignore those signals and keep moving forward. Sometimes it could disappoint you a lot. So listen to your instinct is very important, whether you're a buyer or seller, right? In the end, it's the relationship is what going to help us grow, right? You may have a very good business, profitability, people, but if you don't integrate well between two entities, right, the overall what we want to achieve may not happen, right? So we have seen in a couple of instances those backout scenarios, but fortunately, what we lost is not big so far.
Mm-hmm. No, that's very good points that you make, Saurabh. And Kunal, you have moved from the deal to now an integration phase. And it's not easy to move from an entrepreneurial role to a role, and especially in a multinational company, a large company. What's your advice? What's the conduct? And it's a two-way street, right? It's not just one-way street. The company that has acquired you is doing all what it takes. I'm sure they will do it because they've paid a good amount of money. They've made an investment. They want to make a success out of it. What's your advice to people to make sure that this becomes a two-way street and there's an expectation management overall?
Yeah. So I'm still exploring and learning, especially as far as this phase is concerned. It doesn't happen too often that you get merged into a larger company, and so I'm still learning as we speak. So these are more thoughts than conclusions. So one of the things that I've been given advice on is to kind of take it a little bit slow, not jump to conclusions, not immediately infer from whatever you as an entrepreneur might perceive, because large companies, the speed at which large companies work and the speed at which entrepreneurs work are significantly different. So one is to not draw conclusions, one is not to infer from whatever you see in the short term. Also in a larger company, interests are not necessarily aligned even within an organization. And to be fair, again, it's not necessarily a negative thing, because there has to be some amount of friction, some amount of conflict to move things forward. But as an entrepreneur, especially coming from a small startup world, it's not very easy to see that, because in a small team, you're always aligned, you're always very clear. People are extremely transparent, and you have a very common, clear goal that you want to achieve. So as someone who has joined in a larger organization, I think as an entrepreneur, I want a very clear mandate as to what are the things that you need me to achieve in the short term. What are the things that I would need in terms of the support from the acquirer? I think that is something that I clearly need to state out. And then, kind of reduce the noises around the goal and around the focus to the minimum. Ignore as much as side issues and disturbances that may be along the way, but to have a very clear near-term short-term goal and achieve that. As an entrepreneur, I find it very, very hard to focus on a long-term goal. I'm always looking at the short and the near term, though there is a long-term vision as to what you want to be, but there are very clear milestones and goals that you want to reach in the short term and the near term. So I've tried to keep a lot of that even now. Look at short-term focus, look at short-term goals. At the same time, ensure that there is a proper communication, even if it means there is an over-communication, and to keep conclusions and inferences to the minimum.
That's absolutely gems that you said, Kunal. I think it's important that the ecosystem understands this, because it's not just the deal, but making the deal work for both is an extremely important situation. And Robbie, it's the same with an investor as well. And I have been part of Persistent, where we had investors, and there was an very active investor management, and that made a lot of difference. But again, want to hear from you in the space that you are in, with so much activity, where you don't have time to sleep right now, and you have investors to manage. What do you do to ensure that they are kept informed and they are in the loop, and they are as supportive as you want them to, beyond what they have invested in the company?
Sure. So I think, one of the key aspects of running a business that's fast moving is to kind of just information disparity, right? Because every investor will come to you and says, hey, have you heard of so-and-so thing? They're doing something great. Why aren't we doing more of it? So there's always the chances of kind of, hey, why aren't we making a PUBG? So there's always those kind of questions that keep coming in. I think one of it is just, constantly keeping in touch and kind of doing that. I ran a bootstrap startup for many, many years. I didn't really kind of work with a lot of investors. But, in the last year, when I kind of moved to Super Gaming and kind of started as a venture funded company, one of the good things that we did was to kind of set up an investor call every week, or at least once a month, which we kind of did a small 10-15 minute, discussion around, hey, here's what's happening, here's what's came out, here's what we kind of learned this week. So kind of keeping your investors informed around what you are seeing, and especially in times like these where things are changing every week, we kind of felt like that's the best thing that we did. It only took me 15 minutes a week, but it kind of, so to say, laid the foundation for building a relationship. Most investors stay on a company longer than most employees. So I think that was something worthwhile that we kind of did. And I think that's something that I really learned from, as a, both, somebody who did a bootstrap and then kind of ran a venture funded company and didn't do it well, and then kind of now started again. I kind of felt like that was an important learning and an important effort that we made. There's maturity on both sides required in all of it as well. So sometimes you might be telling, but you might be guiding. Sometimes you might also be screaming and says, no, that's not what we're going to do. So I think that's really the piece that we want to kind of get right. I also think that it's not just, from an existing investor perspective. Some of it, all of my investments have come in from people that have known me for 3 to 5 years. So, the saying that people invest in not in dots but in lines, but I would say that in very long lines, is really true for a deeper industry like us, unless people know to differentiate you, because everybody's saying the same thing, right? There's always the buzzword industry. And that's why you'll see in the investment community, a lot of the investments are happening around what is already done. Like there's a Me Too aspect, there's a herd mentality. Everybody's doing social casino, everybody's doing real money. Nobody's really investing in something new. And that's because I think there's a lack of information kind of portrayed of saying that, hey, here's what we're seeing, here's how it's going to change. And that's why, most good gaming companies don't get funded to start with. And then later on, they don't really need somebody's funding. So that's kind of the two parts of our industry. But that's something that we are hoping that, changes with a lot more maturity coming to it.
This is excellent, Robbie. Thank you for sharing this. And, this is fascinating conversation, and this can go on and on. We have a time constraint as such. So let me ask all of you your last lines as you summarize, the environment as you see both on the investment and M&A. Dr. Prerna, do you want to go first?
Yeah, I think people should, there are opportunities in all this chaos, which is what I think we should be looking at. It is not something which should bother people who are building sound businesses. of course, temporary cash flow problems aside, I think there's a lot that can be achieved, and I think we will see a very quick bounce back soon after travel opens up in the investment world, and I'm quite sure about that. So I'm very hopeful about the future.
Saurabh?
Yeah, so the buyers are interested in a company because they have certain strength, right? If you are a seller, don't change your focus on what you do, right? That's very important, right? That's what going to take you places, right? Pandemic will come and go, or something else will come and go, right? Focus on your strength. I think you will get where you want to go. There could be some delay, but you will get there, right? Same thing, we as buyers, what we are looking for is not going to change, right? We might take a longer path or a shorter path to get there, right? We are still focused on what we want to achieve in the transaction.
Robbie?
So I mean, I always go back to the simple two lines that YC kind of instilled in me when I did YC in 2011. The only two things that Paul Graham always said is write code and talk to users. So I think that's something that it's the only advice that I actually have to share every time, because in any business, I think if you have a great business, nobody can stop you. If you don't have a great business, nobody can save you. That's really the key focus, is just this, right?
Okay, thank you. Kunal?
Yes. So my last words. I see on the panel you have entrepreneur, you have the venture ecosystem, and you also have buyers. I would want more of the breed, more of the same to come into effect. I think Pune and India needs more entrepreneurs, more buyers, and more incubators. So I'm hoping to see more of what's happening already.
Okay, thank you. And this is actually very, very fascinating to hear from all of you. And there's been all of you are putting Pune on the world map. Of course, there is the vaccine, which has made a lot of difference, and we're hoping that it does. But I think it's all of us who are helping the cause to get Pune its rightful due, which is actually very important as we look at. And there are opportunities, as we said, as Pune brings on table. So thank you very much. What I gather, and my quick summary, is the fact that what's happening today is nothing much has changed from the business standpoint. Is what the message is. The message also is the fact that there are transactions definitely happening, but maybe in a smaller bite size than a larger one. It is taking a little more time from a diligence and overall closure standpoint because of travel restrictions and the other constraint that we have. I think they are bound to go out of the equation, and the deal making, both from the investment and the M&A, will pick up steam as we go forward. There are new areas like data, IoT, cloud, which is going to see a fair degree of investments and consolidation as we look at. And I think overall focusing and continuing to focus on the business is the key for any business, and that's regardless of whether you are in pandemic or otherwise. That's the message from this panel. And thank you, NASSCOM, for providing this platform and opportunity to air and present some of the marquee companies and people who are making a difference to the Pune ecosystem. Once again, thank you, Kunal, Saurabh, Robbie, and Dr. Premnath, for your time and accepting this invitation at a very short notice and doing a super job in terms of providing your inputs. That's very, very helpful. Thank you very much.
Thank you.
Thanks, Vivek, for hosting us.
Bye.
And NASSCOM.
Thank you, Vivek. Thanks, NASSCOM. Yeah.
Thanks, everyone.
Thanks, everyone.
Yeah. Thank you. Bye-bye.
Bye.
Thanks.